the sound going normally. Can you guys hear me normally, or is it cutting out? Perfect. Perfect. Awesome. How's everyone doing? Awesome. So we're gonna give people about 2 more minutes to join in, and we'll get started. All right. Let me share my screen. There we go. So just gonna give people about a minute. Let's get started. Got quite a bit to go through. Right. All right. Cool. So today we're gonna go over pretty much everything that I really know about trading, and it's gonna be kind of the most important stuff. We're gonna have some stuff that's gonna be for next Wednesday that we'll leave out, but majority of my strategies, my risk management, all of that good stuff, we're gonna cover that all today. All right, guys. Cool. So before we get into this, I want to kind of give you guys a little bit of background if you guys are not familiar with my trading. I currently trade a lot of options and futures mainly. I don't trade Forex. I don't trade really anything else, mainly just options and futures. I started trading back in 2018, so it's almost 6 years now. And I've been profitable for about the past 4 years. So I started on Forex, didn't go too well. I wasn't a fan of Forex, it's just too much of a mess. So started on Forex. I lost for about 2 years. And until I got into penny stocks. And penny stocks is where I became profitable. And then we got into options, and now we're just trading options and futures. Okay. So coming up on 6 years, it's been pretty wild. Um, but yeah, in the 6 years, got quite a bit of experience from it, at least. All right. So if you guys the classes like crypto or forex or anything like that, these concepts will still work. But in my personal opinion, I think forex and all of that are not going to be the best things to trade. You guys should probably get into something else. That's just my personal opinion. Okay. Awesome. Cool. So let's get right into my strategies. All right. So we'll start off with that. So I mainly trade three strategies. I do have other strategies, but these are my main three ones. Okay, and we're going to cover each one very in depth, kind of go over exactly how they work and everything like that. Okay, so my first strategy is the liquidity sweep and fair value gap. Okay, now let's break this down. What is a liquidity sweep and what is a fair value gap? Okay, a liquidity sweep happens when the market breaks below a low or a high, doesn't matter, but as long as we get a break and the candle does not close below the low. All right. This is what a liquidity sweep is. If we have something like this, where let me show you another example. If we have one here, um, let me see if I can find a good one so you guys see the difference. This right here is not a liquidity sweep, okay, because it's a strong break. The candle closes above the high. This is the actual body of the candle, the colored part right here, the blue one. If that closes above this high, that is not a liquidity sweep. Okay. For it to be a liquidity sweep, I need this candle to close above it and reverse right back up. Okay. Does that make sense? You guys following along with that? Awesome. Cool. So that's the first step for this strategy that we're talking about. Okay. So, next step, what do we look for? A fair value gap. All right. What is a fair value gap? It's going to be a three candle sequence. All right. And it can be any color candles, it can be anything like that. And I'll show you exactly what I mean. You're going to take the low of the last candle and the high of the first one, if you connect those candles and there's a space, see how these do not touch? That is a fair value gap. Okay, do you guys see what I'm talking about here? We have the high of this candle, the low of this one. There's a space between those two. All right. Do you see right here? We have another one. We have the high and we have the low. Does that make sense? That is a fair value gap. All right. We have the low and the high. Connect those. If there's a space, that is a fair value gap. All right. Does that make sense? Perfect. So, with a fair value gap, you're not going to be trading any random fair value gap. Okay. Because what do we have here? We have a fair value gap right here. Okay. We have one over here. We have like 20 different fair value gaps. You are not just going to be entering any fair value gap you see on the screen. You're not going to be profitable. Okay. There's very specific fair value gaps, and we're going to go through each one individually so you guys understand exactly what we're talking about. But for a fair value gap, we're not just trading these random ones because there's at least 50 fair value gaps per day. All right. We're only looking for a specific model. And this is where a lot of people go wrong and lose money when trading is you need to have a what's it called? You need to have a certain model for that fair value gap for it to actually be profitable. Okay, does that make sense? Okay. Um just to make sure you guys can hear me, right? Someone said they can't hear. Okay, perfect. If you guys can't hear or something like that is happening, just leave, join back. It'll fix. Okay. Awesome. Awesome. Cool. So let's go back to that. Now, this is one of the models. All right. Price takes out liquidity. We get a fair value gap. We have two fair value gaps right here. All right. Everyone's clear on what a fair value gap is and what a liquidity sweep is. We understand that part. All right. Over here, I want you guys to see one more thing. We have a fair value gap right here. Okay. Or not a fair value gap. Sorry. A liquidity sweep right here. And we don't have a fair value gap that goes along with it. We only have a liquidity sweep. Does this make sense? Over here, we have a liquidity sweep and a fair value gap. We have both of those together. All right. Now, how do we enter the trade? All right. Into either of these fair value gaps, either this one or this one, and show me some sort of sign that price is respecting. Okay. And I'll show you exactly what that means. So we wait. All right. So far, price is not showing me a sign of respecting. Right now, it's just a complete knife into the fair value gap. I want to see if price holds up, then I'll take my entry. All right. So we have to wait, see some confirmation. This is giving me a little bit of confirmation. Okay. Price held the fair value gap. This is a solid entry that you can take right here. Okay. Are you guys clear on what the liquidity sweep and fair value gap model is? All right. It has to have both together. Let me make sure everyone's following along with that. Okay. Now, time frame. Time frame does not necessarily matter for this setup. Some people trade it if you're swing trading on the 1 hour. Some people trade it on 15 and some on the 30. I day trade, so for me it's going to be on the 1 to 15 minute time frame, any time frame that has it. Okay? If you are trading on swing trading, you need the higher time frames like 1 hour or 2 hours, something like that. This is for day trading. We're going to stick from anything from 1 minute to 15 minute. This one is on the 1 minute. Okay? So anything on 1 to 15 is going to be okay. All right? All right. So you have price respecting this fair value gap right here. Okay. And you have everything that looks perfect. You have this model right here, the liquidity sweep. You have the fair value gap, and it's respecting it. If we did not respect right here, then we'd look to enter right here instead. Okay. But since we're respecting, we'll enter on this candle. All right. So we'll take our entry on this candle right here with a stop loss right below the low of this middle candle. And you're going to target the next previous high, which in this situation is right here. That's the next pivot high that I can see. All right. So the model, pretty simple. You can see it. We have a liquidity sweep, fair value gap, right up to the highs. Okay. So we want to see how that plays out. Either it's going to hit your stop loss for a small loss or a pretty solid win. Okay. And you get a solid move up to that high. Okay. So that's the first model, the liquidity sweep, fair value gap. Fairly simple. This is not the one I use most often. This is probably the least used one that I have, but it's going to give you a very powerful entry. Okay. You're going to see a lot of powerful entries on that. All right. So everyone following along with that? Let me make sure everyone's kind of understanding this. Perfect. Awesome. Awesome. So we're going to take a look at one more example. I'm going to really go in depth on these. So if you guys are confused, you're going to see more than one example and it will start making more sense. All right. So we're going to take a look at another example. So here we have two in one trading session. We have price taking out this high. All right. And we have a fair value gap that respects right here. Okay. So remember what I talked about. We have liquidity sweep, we have a fair value gap. All right. This one I probably would not trade because I don't see a sign that price is respecting over here. Do you see what I mean? The other one you can see was a bit slower. We saw that price was respecting and we were able to enter. Okay. This one price just gets a crazy drop down. So this is not one that I'd personally play. Even though the setup is amazing, there's everything that you need. Do you guys see the difference between the two that I'm talking about? We have this is slower. We have a lot more confirmation. This one is just a direct drop from the zone. Okay, does that make sense? So that one, why I'm not using that specific example, I'm going to show you another one. All right. So price comes and takes out the previous high. All right. And we wick. Again, for this to work, we need to have a liquidity sweep. Price will come and take out the high. Do not close the candle above the high. All right. Make sure the body of the candle is not closing above the high. All right. Does that make sense? That's number one. Number two, fair value gap. When do we get a fair value gap here? We just wait. Let's see where we can get one. We have one right here that we can potentially take a trade on. Let's see if price respects. Okay. So this one looks like a fair value gap. All right. But this is looking pretty solid. Okay, we're kind of slow in the range. We're showing a nice wick right here. Stop loss will be above that high, and your target's going to be at the previous low. All right. So you're entering on this candle right here when we see wicking. Does that make sense? Okay. So, okay, someone said they're confused. Let me see. Again, I want to make sure everyone's following along very, very well with this. So I need to take my time, make sure that you guys are clear with that. Which part is kind of confusing you guys? So I can go over it. Okay, let me explain both again so you guys see what I'm talking about. So, a liquidity sweep, all right, it's going to be at any previous high or any previous low, all right? If the candle comes and we break above it and don't close the candle, okay? So, what this means is let me show you on a little bit over here so I can show you what I mean. So, if we have a candle like this, where let me open up a separate tab if I can here, kind of show you what I'm talking about. So, for it to be a liquidity sweep, all right, the candle has to break above the high, and then we get a here, for example, here we have this low, and notice how price just breaks below it. Okay, it doesn't wick back up, the body of the candle is closing below the low. Do you see what I mean? Compare that to this right here, where the candle breaks and we wick right back down. Okay, we don't get follow through, we just come right back down. Okay. Over here, we break with a strong candle and we continue. This is not a liquidity sweep. Does that make sense? That's simple. Okay. Now, that's one thing. Fair value gap again. I'll show you that a little bit too. We have the low of the first candle and the high of the third one. If I connect a fair value gap, okay, this is what it looks like. We have the low and the high. If there's a space between those candles, that is a fair value gap. Okay. I'm going to show you an example of one that is not a fair value gap so you know what I'm talking about. So we have a three candle sequence right here. Do you see these three candles? One, two, three. If I try and connect the low of this candle and the high of this one, they won't connect because the high of this one is past the low of this one. There is no space between them. Okay. Over here, we do have a fair value gap because price has a space between those first and last candles. Do you see what I'm talking about? Do you guys follow along with that? It has to wick, and the fair value gap is going to be three candles. If there's a space between them, that's it. Okay, awesome. So, sorry, I didn't mean to click that, but okay. So let's go back to this liquidity sweep one that we were talking about. All right, we have a liquidity sweep. We have a fair value gap, the first fair value gap that it pulls into, and price is showing a good sign of respecting. Okay. Over here, we have another fair value gap that also works, but do you see the difference between this one where price comes into it and it instantly is just, right back down, compared to this one, which is pretty slow? We get a few candles in there and then we reject down. That's what I want to see ideally. Does that make sense? Okay. So that's the first model. This is the one that I use the least. We're going to get into my favorite ones, the next two ones coming up. Okay. So this one is going to give you really high quality trades, but it's not one that I use as often. It's one that you're going to get some pretty solid trades on, but they're not going to come up like every single day. You're going to see this maybe like two or three times a week, I would say. Okay. So if you see it, pretty awesome, but they're not too common. Okay. Now, everyone understands that one. Let's get into order blocks. Now, this is a very, very simple model, and it's one of my favorite ones. All right. So, what is an order block? All right, let me explain this in the simplest way possible. So, an order block is going to be, let me see if I can find a better example. So, when we have a sharp drop in price, so you want to look for a very strong drop. Okay. When you have a candle like this, you're going to mark out the high and low of the candle before we had that drop. Okay. We have a very strong drop, as you can see right here. And we have the high and the low of the candle before that drop happened. Okay. I'll show you some more examples. All right. We have, let's see. Let me see which one I can use as a better example to give you an idea where we have a strong drop. Let me go on a higher time frame. One sec. All right. NQ doesn't have too many recently. Let's see if there's any on the higher time frame. So right here, perfect. So an order block, a very sharp drop in price. Okay. Very sharp drop. And the way I identify if it's a sharp drop is going to be depending on how strong the move down is. Okay. As you can see from this point, we got a very strong rejection. We also had a strong rejection right here, but the move was really not too much, right? We just reversed right back up. So this is not a good order block. This is. All right. You guys will see what I'm talking about in a second. So don't worry. You guys will understand a little bit more clearly. All right. But the idea of an order block is we're going to take a look at the last candle before a sharp drop in price. Does this make sense? Perfect. Perfect. So, just very simply, like I said, take the last candle before a sharp drop in price. Boom. So, let's head into some more examples of order blocks. All right. An order block with a sharp drop in price, we have a massive move to the downside. All right. And the last candles before we had that massive move to the downside is all the way up here. Do you guys see what I'm talking about? We have that large drop to the downside, the last candles before price reversed down is all the way up here, okay, on this candle. Awesome. So, how do we trade order blocks? All right. We're going to look to enter when price returns into the zone. So, you can enter right here, okay? If price shows a sign of respecting, you can enter right here as well. So, the way with order blocks is fairly simple, right? I just need to see something that price is respecting. So, for example, right here, we have Wix. This is solid. I'd like to see that. Okay. We have Wix right here. That's solid. I like to see that. So this is pretty nice for a trade. Okay. The order blocks are much more simpler. You just look, like I said, the last candles before a very sharp drop. Okay. So the sharper this drop is, the better. All right. This is not a good order block right here, for example. All right. You technically have an order block right here, but do you notice the difference between this order block where it's just like one candle down and we reversed right back up? That's one thing. Over here, you have a massive drop, which is a took out the previous lows, it took out everything. This is solid. This is what I want to see. Also, with an order block, if price just comes right through the zone, we're obviously not going to be trading that. Okay. We're only trading the ones that have a sign of respecting. Okay. For me, I personally like to see wicks. That's the most important thing. So I want to see wicks like this one, where it's not the actual body of the candle, it's these long black lines. Do you guys see the difference between the candle's body and also the wicks? Are you guys following along with order blocks? What time frame do you look for order blocks? No specific time frame at all for this one. If there is a specific fair value gap or order block like time frame, I will let you guys know. But if I don't say anything, there's no time frame for it. This can work on the 4 hour, this can work on the daily, weekly, 5 minute, can work anywhere. All right. Do you have a preference on trading calls or puts with these order blocks? You can only trade puts if it's one to the upside, for example, right here. And you can only take calls if it's to the downside. Okay, so I'll show you an example. Like this one, we can only play puts. This next one that we're going to go over, if it's an order block to the downside, I can only play puts or calls right here. There isn't like a preference in the sense that one is stronger than the other. They both work perfectly fine. All right. Show on XAU USD. I don't trade Forex. I personally don't trade those. I'm familiar with them. All right. So, order block. We understand that. Are you guys understanding that part? Okay. So, we enter, target the next low, which in this case is all the way down here, and should get a pretty solid move to that next low. All right. This is a trade that we took actually. We're about to go over all of the live trades I took. So, we're going to take a look in a second on the trades that I took live and kind of walk you guys through that as well. But you guys need to understand the strategies that I'm talking about so you see what I'm saying, okay? So, order block, very simple. When price returns into the zone, take your entry, target at the low, stop loss at the high, right above the order block. Okay? Awesome. Let's take a look at another example of order blocks. All right? You have a massive move to the upside. All right? So, what I'm going to do is take my zone right here, mark out the last candle before we had that large move to the upside. Do you guys see a very massive candle to the upside? A lot of follow through. The last candle before we got that move, we're going to mark out our order block right there. Do you guys see what I'm talking about? Let me just make sure everyone's following along with order blocks. How do you determine whether or not the order block is more than one candle? You can't have an order block with more than one candle. It's only one candle. Okay, good. Looks like everyone's following along. That's perfect. All right. Perfect. So let's take a look at this example right here. If you guys remember, we had wicks right here. What do I want to see for an order block again? I want to see wicks. I want to see these long black lines on the candle. I don't want to see price struggling. I don't want to see anything like that. This is perfect. We have very long wicks, prices respecting. This is as amazing of a setup as you're going to see. Okay. you have the last candle before the move up, mark that out. Okay. Price returns into that zone, take that entry. Okay. If it shows you confirmation, you're good to go. All right. So, again, same situation. You want to target the most previous high. So, in this situation, it's right here. Or if you want to go a little bit riskier, you can go up to this previous high all the way up here. So, let's take a look at how you would play this. All right. You'll take your entry with a stop loss right below the zone, and you're going to target this previous high. All right. Do you guys follow along with what I'm looking at for this trade? Order block, price gets into the zone, starts wicking, and we get a very nice move to the upside. All right. Perfect. Why is it called order block and what's the logic behind it? I mean, there's 20,000 different names for the same concept, but I really don't know why they named it order block, but that's just the name it is. How many confirmations do you wait for an entry? Honestly, you can enter on the immediate confirmation. I don't even wait for the third one. You can enter on this one right here. You can enter on this one right here if you want. You can enter on this one right here if you want. So I personally would enter on any of these. I'm okay with that. So one confirmation is enough for me. I don't really wait for multiple. You're just gonna be waiting longer in this trade because it's sideways and then you get the move. So in my opinion, if you get the first one, expect that price probably won't get the reversal immediately. Um, but also this is going to be the best entry. So the less times a order block has been tested, it's going to be a better entry usually. Okay, they're pretty powerful. You can still enter on this one, like I said right here. You can enter right here. You can enter right here. Any of these are okay. It doesn't have to be the first test, and it doesn't have to be the second. You can enter on either one. I personally love to take the first test most of the time. Okay. Show it on XAU USD. Like I said, I don't trade Forex, so I'm not really familiar with all the movements on those. What's the logic behind order blocks? Whenever price has a very large move to the upside, you can expect orders that were sitting to get filled there. They still want to get filled. So we expect price will have a pullback, fill those orders, and then reverse right back up. This is if people can see that a large buying order came in, let's say someone bought, I don't know, 100,000 shares. All right. And maybe they got filled on only 50,000. Okay. The idea is the other 50,000 on top of the other people that are seeing this that want to enter because price got a very sharp move is going to give us that extra power to move right back up. Okay. So anytime we have a large buying order in the market, usually all of those orders don't get filled at once. Like this probably did not get filled all at once. And some of those orders are still sitting there for that specific price. And when I say large orders, I'm not talking about, some guy sitting in his bedroom trading with $5. I'm talking large orders. Okay. These are not like, you know, small orders. All right. Okay. Cool. So let's take a look at this trade real quick and what we get. So we take out that first target. Let's see if we can get to that second target as well. So that's the second target as well, just from that one order block. So what we look for with order blocks, again, fairly simple. Okay. The larger the move, the better. We want to see wicking, and that's it. Okay. We're keeping it simple. It's not as complicated as the first model. It's just very simply we look for a large move, last candle, take the entry on that. Okay. Awesome. Awesome. So now we're getting into my favorite setup, and we're going to actually take a look at a few of those that I took live. So this next trade is one that I took yesterday, and I'll show you guys that example right now. So let me switch over my screen. Okay. So this next setup we're about to go over, is one that I took live yesterday. Change windows. Let me see if you guys can see my screen. Let me just make sure. Perfect. All right. So this trade I took yesterday on Tesla, it was at 650, and this is one of my favorite setups. So we're going to cover that very specifically. All right. So this model is known as the breakup structure and fair value gap setup. All right. So you saw a liquidity sweep and the difference between liquidity sweep and a breakup structure. All right. Liquidity sweep breaks and it reverses right back up. Okay. A breakup structure breaks and we continue dropping. Okay. For example, like I said, these are liquidity sweeps right here. Okay. Because price breaks the previous high, instant reversal right back down. Okay. These are liquidity sweeps in a sense. Let me see if I can show you again. This is a break of structure. All right. Price breaks and we get a continuation to the downside. It's not just a immediate reversal back up. We're getting a very sharp drop. Price breaks the previous low and we get a very, very nice continuation. So, do you see the difference between these two? This is a liquidity sweep right here on the left, or the right, I should say. So, we got a liquidity sweep right here, and we got a breakup structure right here. Hold on. I think I didn't change my screen. Hold on. My bad. Hold on. I just realized that I had it stuck on the Discord screen. Let me just make sure. All right, my bad. Okay, now let's do that again. So, do you see how this candle breaks? We close the candle and we get a sharp continuation. This is called a break of structure. We take out the previous low and we get a continuation. Okay, so this one on the left is called a break of structure. Okay, this one right here. Do you see how we break and instantly reverse right back down? We wick right back down. This is called a liquidity sweep. Okay, are you guys seeing the difference between these two? If we get a break and price continues, we close the candle and continue. This is a break of structure. If we get a break and price reverses right back down, we wick. This is a liquidity sweep. All right. Do you guys see what I'm talking about? All right. Is this considered an order block as well? Yes, this is an order block right here. So you guys are already seeing that. That's perfect. So this right here is an order block too. We have a sharp drop in price, and that last candle before that drop is a order block right there. So again, one more time, break of structure is going to be when we break and close the candle, get continuation is when price takes out the high and reverses right back down. All right. Awesome. Awesome. Okay. So now let's take a look at the exact trade that I took on Tesla. Okay. So what do we have here? We have a break of structure. So price breaks, and instead of reversing right back up, we are continuing, right? Price is rejecting. All right. So we're holding below that level. All right. Now, this trade that I took, we'll take again another look at that. All right. The exact time, the exact everything. So you guys see exactly what I'm taking in the live markets. Because it's one thing for me to tell you guys all this and that, but it's one thing for me to show you guys the exact timestamp trade I took. So let me show you that as well. Okay. So again, we have a fair value gap, all right, on Tesla. So take a look at this chart, and then we'll take a look at the alert. So on the alert, we see 650. All right, we're taking an entry on Tesla puts. This is one of my favorite setups. This is what we took on live, and I'll show you the kind of chart for that setup. We have the break of structure, we have the fair value gap, and we have the continuation down. All right, so let's take a look at that exact chart again. Okay, let's see if you guys can identify what I'm already showing you guys. Let me change my screen. Now we're back. So that exact trade, same situation. Price breaks, we get a continuation. All right, we have a fair value gap. Okay, and price is respecting it. Now, this is the most important part. We have a wick, which is respecting. That's the most important part of this entire setup. All right, so we can enter right on this candle. Okay, so again, price breaks the previous low. We get a fair value gap, and we enter when price pulls back into the fair value gap. All right, you guys kind of seeing that? So this is the exact candle I took my trade. You guys can see 650. We're in that trade. And let's take a look at the stop loss and everything that goes with it. So we have a stop loss right above the high of the middle candle of the fair value gap. So stop loss is right there. And for finding my exits on these trades, I'm looking at the next level that price has a low. All right. What's the next level that I can see for a low? All the way down here at 255.77. All right. So my target's going to be at the next low. Okay. So let's go back to that trade again one more time. All right. So break of structure, fair value gap, everything is perfect. Let's take that trade. Okay. And just like I said, on that live trade that we took as well, price gets that perfect follow through all the way down to that low. We secure about 2R on that trade. All right. Does the break of structure one make sense? Let me make sure you guys are following along with that as well. Can you use break of structure for pre market levels? Yes, you definitely can. How do I choose when to exit? Like I just said, we want to make sure the next level for our exit is going to be the previous low. So in this case, the next previous low after I entered up here was all the way down here. Okay. So I'm looking at the next previous low or previous high. You'll see an example of that in a second as well. Now, the specific time frame for this one, all right, you want to stick to 1, 3, or 5 minute. All right. That's the best ones. 1, 3, or 5. I took this one on the 1 minute, but like I said, 1, 3, or 5, they're all fine. All right. Does it make sense? Awesome. So that's one example. We're going to take a look at another one. All right. So again, what do we have right here? Low, the previous low. All right. So the next low. And instead of reversing right back up, what happens? We continue dropping. So this is a valid break of structure. So that's step number one out of the way. What do we see next? All right. We have a fair value gap like this one right here. All right. So what do I look for now? If I have a break of structure, I have a fair value gap. What do I look for? I look for price to retrace and show me a sign of respecting. All right. So let's take a look at that. Do we get a retracement? Perfect. We get a retracement with a wick. Everything about this setup looks amazing. Now, let me tell you, sometimes you will have cases where everything looks perfect and then it just doesn't work. All right. So just be a heads up on that. No strategy is going to work 100%. Most of the time, it's going to work like 80% or 75, 80, 85. So again, sometimes you'll see a perfect setup and it just may not work out. Okay. So just keep that in mind. All right. So if you guys ever take those trades and you're like, well, why did this not work out or anything like that? There will be times that you're off. All right. It shouldn't be more than 50% or 60% of the time, but if you're getting that many wrong, then something's not right. So we have our entry in the fair value gap. All right. In this case, we're using the 5 minute. So you guys can see the difference between one that I took on the 1 minute and one I took on the 5 minute. All right. So the wick is perfect. Stop loss goes above the fair value gap right on this middle candle. So not the first or the last one, the middle one. All right. Now for my target to exit the trade, where is my next low on this setup? All right. We have our next low right here. Okay. The only thing I would be a little bit careful with this setup is there was an order block right here, which at the time that I was trading this, I didn't really see. So I would have been a little bit more careful with that. But that order block is something to watch for. Usually When it's off the market open, it's not usually anything really important, but something to keep in mind. Okay, so market open order blocks not really important in my opinion. Okay, so let's take a look at how this trade setup plays out. Right, this is one that we took again. Let's take a look at it. Okay, so we get everything that we need: break of structure, pull back into the fair value gap, and a drop to the next low. All right, you guys see how the break of structure fair value gap one works. This one is going to be a lower risk to reward, I would say. These ones have much higher RRs. Like this one's 3, this one's like 3 again, this one's like 3 again. So we're not going to get as high of a risk to reward on this, but these setups play out a lot more often. It's one of my favorite setups for sure. Okay. Awesome. Exactly. So you got that right. Okay. So break a structure, fair value gap, pull back into the fair value gap, and target the previous low. All right. So we're going to take a look now at an example of not a short, but we're going to take a look at a long. All right. So right here, what do we have? We have a break of structure. Price closes above the high and continues. All right. So what do we do in this situation? This is a trade that I took again, where we're going to go over all of that in a second so you guys see how it is live. But let's take a look at exactly how this setup plays out. Okay. So you break the high and you have a fair value gap right here, and you have a fair value gap right here. Your job is to wait for any of them to retrace and give you a sign of respect. So price comes into this fair value gap and shows a sign of respect. All right. So you're good to enter off that one. If you want to wait, enter on this one instead. That's also okay. But in this situation, both of those fair value gaps worked. All right. Now, what do I want to see for this to be perfect? I want to see price wick into the fair value gap. Do you guys see how it's a wick? Very strong sign. And these entries are perfectly fine to take. All right. So break of structure. We break above the high. We get a fair value gap and we enter when price retraces into the fair value gap. Okay. That's the first three steps. So let me write this out so you guys can see what I'm talking about. Break of structure is number one. All right. Number two, fair value gap is number two. All right. Number three is retest and reaction to the zone, to the FEG. And number four, you're going to target the previous high. All right. If we don't get a break of structure and we get a fair value gap, there is no trade there. So, for example, right here, there's a fair value gap, but there was no break of structure. So, no trade for me. Okay. I don't see a trade opportunity there. If it has a break of structure, then we'll look to enter. So, even though this one worked out, we're only looking for the ones that have this specific model: a break of structure, a fair value gap, and a reaction to the fair value gap. Okay. Perfect. Awesome. So, let's take a look. Now, where's our next high? Let's go on Google's high. 5 minute right here. So the next target is going to be this high. Okay, well, there's do. Next high right here. So we're going to target this next high right here. Let's go back to our time frame. Again, like I said, notice the difference between these time frames. One of them I took on the 1 minute, one of them I took on 5, one of them I took on 1 again. So all of these setups can be traded on any of these time frames. There's not a specific time frame to just stick to and that's it. You can take it on anything from 1, 3, or 5. Alrighty? Perfect. So let's take a look at how this setup plays out. All right. So we get a very nice move up to that high. All right. We got another break of structure. This one got us like 5 break of structure opportunities. You got one right here, take out the high, right back down. So this one gave quite a bit of opportunities for a break of structure setup. Price just kept breaking highs and respecting a fair value gap. So this was a very, very nice trade to see. I mean, that's one setup right there, two setups, three setups, and four setups that were respected for this break of structure fair value gap. This was very nice to see when we had that trade going. All right, perfect. Isn't this also a balanced price range? Um, Let me see which one. There was a balanced price range right here, which is perfect. That's a very nice balanced price range actually right there. It's like on the dot. So yeah, that's a very good eye right there. You caught that pretty nice. So that right there is a balanced price range. Yep. Wouldn't that last entry be invalid since no wick? It's not the best entry, but you can still take it because price is respecting the zone. It's holding inside the zone. If you remember what we were talking about with the liquidity sweep and fair value gap one, we can still take this trade even though it didn't just wick immediately. I just would not have as much confidence on a trade like this. Instead of an A plus setup, this is probably an A minus setup. Okay. If we see a wick, that's just going to be the like best case scenario. All right. Perfect. How's everyone following along so far? Are you guys learning? Are you guys, is this all making sense? I want to make sure everyone's kind of following along with all this. Awesome. Awesome. Perfect. That's what I like to hear. All right. They are pretty complicated, like, concepts, but I'm trying to break it down in like the simplest way possible so you guys like can see what I'm talking about. All right. Cool. So let's take a look at a few more extra examples that I had right here. Or by extra examples, I mean one more. So we have another order block on ES. This is one that I was looking at recently, where we had a very nice drop from this level. Okay. So we had a sharp drop in price right here and a lot of continuation down. The next candles that retrace into it show wicks. So wick right here, very strong rejection. Wick right here, not as strong of a rejection, and wick right here. So all of these are pretty solid. Okay. Order block once again, price right above the high, target at the next low. So order blocks, the simplest one. In order of what's the simplest setup, I think order blocks are number one. Break of structure, fair value gap is number two. And the liquidity sweep, fair value gap is number three. This is going to be the most complicated one, I would say. Okay. Perfect. So someone said explain more on break of structure. Let me again recap on that. Breaks below a low and we close the candle below it. All right. Meaning we don't reverse right back up. So if price would have just reversed right back up like this, like we would have broken and reversed right back up, that is a liquidity sweep. All right. But since it broke and it continued, that is called a break of structure. The easy way to remember this, break of structure meaning break, and liquidity sweep meaning sweep. So imagine price comes, sweeps, and just reverses right back down. For it to be a liquidity sweep, we break and reverse. For it to be a break of structure, we break and continue. Very simple. If we break and continue, break of structure. If we break and reverse, liquidity sweep. Very, very simple. How often do you use candle range theory? Pretty often. I would say they don't show up too often, like every single day. You're gonna get them maybe like once every week or so. But yeah, whenever they pop up, I trade them pretty often. Okay. Isn't the liquidity sweep plus fair value gap pretty much a silver bullet? Yeah. All these concepts have, like I said, like 50 different names. Like you're gonna find 300 different names for the same concept, to be honest. All right. Perfect. So, what I want to spend a little bit of time on is I want to take a look at my live trades, and then we'll also actually let me do something else as well. Let me update you guys on my thing account right now. I don't know if you guys have been following along with my 10K account, but let's take a look at that really quickly. Hold on. Switch over tabs. So let me show you guys that. So I'm almost near the end of this challenge account that I have. One second. I need a message from that. One sec. Cool. So let me share my screen real quick. So we're almost done with the 10K. Where are we? Here we go. Change windows. So we're almost done with the 10K account. We're now coming up on almost 70K. This month hasn't been as crazy, and we've only got about 15K to end the week off. But we started this one way back then with about 10K. We're looking to close off pretty soon. It's looking pretty solid. So we got two accounts. My $400 lotto account that started at 1,000, so we lost on that account. And this one started at 10,000, now sitting at $400 short of 70K. So overall, we're looking pretty solid. So pretty soon, you guys will see. I'm gonna withdraw this, and we're probably gonna restart. Probably not restart from anything, but we'll just keep trading. Actually, I don't know what the plan is. Let me not speak too soon on that, but we'll see exactly where we get with that setup. When am I gonna clown on the Twitter trolls? Man, I don't have time for that, to be honest. Too busy. But I can promise you 90% of those guys can't show you what their account is for the past few months. And if they can, make sure it's on a real broker. That's the most important part. Why don't I take bigger size trades? So I'll tell you this one thing. Sizing up in trading is the most difficult thing you'll do. Right? So my account's at like 70K right now. I'm still trading with the same size that I was like trading, I don't know, like at 30K. So it's really difficult to size up. Pretty hard, I would say. So yeah, sizing up is not something that you can really just do that easily, for sure. Yeah, we're looking pretty solid on that. I'll withdraw. Let's go back to my where are we? Let's go back to Discord. So yeah, um, take a look at this. So now what I want to do is review my live trades, kind of to show you guys like the actual trades I take, and it's not just like everyone can tell you like after the market happened, like oh do this and do that. It's something totally different for me to show you as it's happening. Okay, so all of these trades that I take every single morning at 9:30 a.m. Eastern time, we're live in the market. So let's start off from last week. Let's not really go too far back, but take a look at some trades on that. So if you guys remember those Google trades that we were looking at, let's start. Actually, let's go back a little bit more. I don't want to really bore you guys with all those trades, but we'll take a look at this. So every single trade I take, you guys will see it before I take it, right? They're all timestamped for the past 4 years of my trades. I have an entire actually I'll show you right now. Hold on. Where's my old server? So for the past 4 years of my trades, you guys can come back here and I'll just open up like a channel. Where are we? Let me see if we have that. Hold on. 1 second. So yeah, I have my data from back in what was it? 2021. That's when I had my first everything. So I've been keeping track of all of my trades since 2021. And yeah, so I have the whole like log history of that, right? But what I want to go over right now is kind of how I take my trades and you guys see in the live market kind of how I do it. All right. So I before I enter any trade, I say, okay, watching Amazon 185 puts, explaining kind of the setup, why we take it, whatever. We enter at 88 cents a contract if we need an average down, all of that. Now, why I want to show you guys this is to understand my risk management. All right. Risk management is one of the most important things in trading, and a lot of people skip past this. No one really talks about this and goes in depth. But what I do in trading, it's more important to limit risk than anything else. Okay. You're not here to catch 100%, 200% trades. You're here to catch your small piece of the market and move on. All right. So what I do a lot of the time is I entered at 88 on Amazon. We got a pretty solid move to about 96, 90, 97. I raised my stop loss to 84. So at this point, I'm risking 5% to get about 20% profit. So in the long run, you need to have a very consistent risk management in place for it to work perfectly. All right. You'll see on every single one of my trades, it's a very strict system. This is the trades that I take live, like I said. It's a very, very strict system that I follow every single day. The concepts that I just showed you, the models, those are what I use to take the trade. The risk management is the second part of it. All right. So for Amazon, this was one trade that we took a few days ago. Perfect. We enter, we have a very tight risk management system, and we get a very nice move. All right. This was one of those that we were looking to play a pretty solid move. We got we didn't really get anything crazy on this, if I'm not mistaken, or did we? No, Amazon was a really good one. We ended that day at 1,133. So I take that back. That one ran quite a bit. Let me see. So again, same situation. Tesla, we take the entry, 0.78, right? We raise our stop loss to limit risk as much as possible. And I'll explain the risk management a little bit more right now. We'll go on the charts to show you guys. So we have stop losses, right? We raise them. We're only risking like 5% at this point. So the worst case scenario that I'm really risking on a trade is like 20% if it goes directly down. But if it's like once the trade's up a little bit, I'm only risking like 5% worst case, I'd say. All right. Again, this is the Tesla setup that we were talking about. Break of structure, fair value gap, right? Again, very nice. All right. So that's just a few trades that we took. Let's also take a look at today's trade actually while we're at it. So today's trade, we didn't really go over that, but let's go over it. Let me open up today's trade, what we took. But same thing. Every single day I trade the same exact setups. Nothing really different. It's just the same setups every single day. So we had the same setup on what's it called? Tesla today. So this one was it two? I believe it was 2 minute. Let me double check. It was two, three, or five. Yeah, so this one we took was a little bit short of the fair value gap. But the way I took Tesla is that we had that sharp rejection. So I could already see the weakness in price, right? We got the break of structure and so forth. This one was a way riskier trade, right? But a fair value gap, it just didn't really get into the fair value gap. It missed it by 1 cent. Like it really wasn't anything crazy. Um, and I just realized I think I don't have my screen to the charts. My bad. I keep forgetting. My bad. Sorry about that, guys. Hold on, let me share my screen. All right, let's get directly into risk management because I don't want to waste too much time. So we'll get directly into risk management. So let me get my chart back up, change windows, and right there. Okay, perfect. So for the Tesla one, I'll post it in the trade recaps. Like I said, I don't want to waste too much of you guys' time because I know it's pretty late right now for some people in the world. So we'll go over the risk management, cover that, and then I'll post a trade recap on Tesla in the channel. All right, so let's really quickly go over this. So this is the part of trading that a lot of people do not really cover. All right. So risk management is the most important part of trading. You can have a 90% win rate trade. All right. And if you guys noticed one thing, all of these fair value gap trades that I'm taking and order blocks and whatnot, they're all low risk. I'm not really risking anything crazy. They're all above 1 to 1.5 risk reward ratio. That's what we want to see. Okay. We don't want to see trades where it's like, if I throw in, I'll explain something to you guys so you can see a little bit what I mean. Let's say you have a 90% win rate. Okay. And you're taking like price moves up a little bit, you're taking a green, and then one red trade just completely destroys your account. This is what a lot of people struggle with. Okay. You might have 10 wins, but one loss just completely wipes out the portfolio. So 10 small wins, and then, for example, you enter right here, you try to, I don't know, go long off this fair value gap or whatever, and then you just get completely destroyed, right? So your win rate means absolutely nothing. All right. You can, whenever people try to flex win rate, it means nothing to me. All right. Your win rate means nothing if you're not properly doing risk management. All right. You can have a 90% win rate, be unprofitable. You can have a 20% win rate and be profitable. Okay. So let me explain how this works. All right. You can have, I don't know, 8 trades lost and 2 wins. All right. And you're green. And the reason this works is your R multiple. So what does that mean? If you see on every single one of these charts, there's this number right here, which is risk to reward ratio. All right. We want to aim for anything above one, ideally. But I don't want to take a trade, for example, it looks like this, where, let me show you an example. I don't know, let's say my stop loss is all the way up here and my target's like right here. Okay. Which is something that you'll see a lot in the trading community is people will come in and be like, oh, just want 10 trades, and they're only taking like profits like slightly, but their stop loss is all the way in like Lord knows where. Like, I don't know. If you take one loss, you're probably going to go into like generational debt right there. So that's why risk management, all right, main focus. Do not focus on your win rate. Win rate means absolutely nothing. Your risk management is all coming down to making sure your stop losses are tight, okay, and making sure your profit targets are being respected. Okay, you don't want to enter a trade, for example, off this order block right here, and then 2 seconds later you're like, oh, this is too good, I have to take the trade, like profits. Okay, have your levels, have confidence in them, and just hold. Okay, do not get scared. You're not, nothing happens. Worst case, you do take a stop loss, it's going to be a small loss. It's fine. You move on to the next trade. Okay, but you need to have a very, very strict system. Do not focus on, you know, the extra stuff, whether it be like win rate or this or that. I have, I don't even know what my win rate is, but it's probably close to like 75 or 80%. I could care less, right? What matters to me is that I come into the market and I'm not risking my entire portfolio on one trade, right? I'm not, I don't know, like a really bad like position. So always, whenever you place a stop loss with fair value gaps, all right, we'll use that as an example. Um, Always stop loss goes at the fair value gaps middle candles low. All right. So for example, let's say we have a fair value gap. Let me wait. Yeah. So let me show you some more examples. Okay. Something that would be good and something that wouldn't be good. So we have a fair value gap right here. All right. Now let's say you took this trade, but if you take a look at this, all right, your stop loss is all the way down here, and your target's all the way at this high right here. This is under one risk reward ratio. In the long run, you're not going to be profitable if you're consistently trading risk reward like that. Okay. If you're trading something like, what did I just do? Uh, okay. If you're trading something with about 2.4, something about 0.33 is horrendous. Okay. We don't want to look at that. If we're trading 3.4, that's amazing. If we're trading anything above 1.50 is amazing. Okay. Just make sure next time you're taking a trade and really take the time, kind of like journal all of this, see what sort of um just see what kind of numbers you're running. Okay, after your trading day is done, just take a look and see what kind of risk reward you really had. So every single day I go back and I take a look at all of that, but I just need to make sure that my numbers are making sense, right? Even if I made money on, like, let's say one trade, but the numbers didn't make sense, then I don't consider that a win. Okay. If I would have taken this AMD trade and it was a 0.33 risk reward ratio, but I got a win, that's very bad. I'd rather you take a loss, like a small loss right here, than, end up with whatever the hell that is. Okay. So risk management is something that we'll probably cover next week if we do a lesson again, maybe in 2 weeks. I'll have to let you guys know. But it's something that's really important and that we'll go over a lot more. Okay. Why don't I trade Forex? Why is it better not to? Forex just is a total mess. The whole entire industry is just like complete mess, to be honest. The brokers in Forex are too messy. The price action in forex is way too messy. Everything whenever everything else just exists, there's no reason for trading forex, to be honest. What I'm going to be doing is for all of the people that we have the live trading. So like I said, every morning we have live trading at 9:30 a.m. Eastern time. So I'm going to start recording those so you guys can go back and watch those later, probably way later. Um, but if you guys do want to trade with me for the next week, we do have that free trial. You guys take advantage of that. It's completely free. You guys can hop and trade with me. You guys can feel free to do that anytime. If not, I will be uploading the videos afterwards, so you guys can go back and watch that too. But if you guys do want to join me for where are we? What day is today? I don't even know. Hold on. Today is Thursday. Yeah, so you guys can hop in if you want to take advantage. Yeah, like I said, completely free for the next week. All right, there's a channel right there called Free Trial. You guys will see right up there. So yeah, if you guys want to join in, feel free to do so. Is this session recorded? I believe someone's recording it. Yeah. I personally am not recording it because my computer would probably blow up. But yeah, I believe someone's recording it. Any premium course or videos? Yeah, in the when you guys get the free trial, you'll see a bunch of videos as well. I have like I want to say over 50 videos maybe that goes over like all my concepts, everything like that more in depth. So yeah, it's quite a bit to go over right there. Yeah, someone's recording right there. So FX Ali, it's gonna be it's gonna be a pretty tough day in your DMs. That's for sure. All right. So how did everyone enjoy the session? Did I take up too much of your guys' time? Did you guys learn anything? Awesome, awesome. Oh yeah, that's what I like to see. So yeah, this is I really wanted to take the time to kind of show you guys like everything because there's so much in the trading industry and I don't think a lot of people kind of show it the right way. So I decided to take some time today, really just sit down, show you guys everything. And yeah, so definitely I'll try to do another class in the next 2 or 3 weeks. I'm not entirely sure when we'll have time for the next one, but um yeah. Yeah, definitely wanted to take some time, go over everything, kind of get people on the right path. All right. I'm not going to go over candle range theory, so we're going to do that probably next time. Again, I don't really want to do like everything all at once because you can't like really learn. I feel like when you learn 20 things at once, you're not going to remember anything. So I'd rather do piece by piece. Okay. Need lifetime already? I don't think we're going to have a lifetime options until the end of the year, maybe, but right now, I'm just focused on getting the free trial. I want to see people come trade with me live, kind of just experience the market live rather than anything else. All right. Awesome. Awesome. So I'm very happy everyone tuned in. Um, it was a great, great session. So, everyone, yeah, thank you so much for joining in. Great time. And I hope everyone really learned something. Yeah, it was a very, very good session, in my opinion. Okay. Perfect. Perfect. So, everyone, take care. And I'll see you guys most likely in the next week or so. We'll have another good session. All right, guys. Again, for those that want to